Our Cashflow Excel template has a section specifically for entering cost of sales. So if you're preparing cash flow forecasts which needs to include cost of sales, then our Cashflow Excel template makes this process very easy to achieve. Down the left hand side under the heading of cost of sales, you have up to 20 separate cost of sales headings. The first 5 headings have been tailored for this particular cash flow forecast. So the first one says contractors, then direct wages, employees NI and direct wages, building materials and so on. This is achieved by the next column, which is cost of sales description. So let's change cost of sale type 6 by typing something in this cell. So let's type in other material costs. And you'll straight away see down the left hand side the heading has changed from cost of sales type 6 to other material costs. On a previous video we looked at sales or turnover and how the Cashflow Excel template deals with this. So if you want to have a cost of sale directly related to a sales line, all you need to do is to type in your sales line and the cost of sales line will inherit the same text. So as cost of sales type 7 down the bottom here hasn't had its own label attached to it, I'm going to type over type 7 of my sales line, cost of sales test, and I'll scroll back down and you'll see that the cost of sales heading has inherited the text from the label we've given to the sales line. This is useful, so for example, if you have sales of one particular product line, but you've also got the cost of purchasing the goods relating specifically to that sales line. So you can line up your sales versus your cost of sales. The next column relates to VAT. VAT is very straightforward with our Cashflow Excel template, and this is changed by clicking on the drop down menu and by selecting the associated rate of VAT, or could be sales tax in your country or GST, that's associated with that particular cost of sale heading. This is set to 20% at the moment, but it could equally be 0%, 5% or exempt. However, if the rate you require for your particular cost of sales heading is not shown, all you need to do is go to the Info tab, scroll down to the list of VAT rates and change one that's already there. So I'm going to put in here 10%. Go back to your Data tab, click the drop down menu, and you'll see that 10% now exists. So I can select 10% as my VAT rate or sales tax or GST rate. The next column relates to PAYE rate or payroll taxes. In the UK it's called PAYE or pay as you earn, but in other countries it will be referred to as something different. You can change the heading name quite simply by going to the Info tab and changing that. But essentially what we're talking about here is payroll deductions. So if, for example, as in the second line here, it's direct wages, I've entered a percentage of 20%. And that's done in the same way as VAT rate by clicking the drop down and selecting one of these different rates. Now at the moment we've got 20%, 10%, 13.8 and so on. And similar to the VAT, if the rate that you require is not listed, quickly jump across to the Info tab and you've got a list of payroll tax rates here. So let's put an unusual rate in there of say 40%, just so we can see it on the Data tab. Jump back to the Data tab, click on the drop down, and there's the 40% that we've just entered on the Information tab. The way this works is that for every entry put into each of the columns across from January, in this case 2018 onwards, in this case the 40% is assumed to be a government tax deduction. So for example, if we were to enter £1,000 in January, £400 of the £1,000 would be deemed to be tax. And the balance of the 60% in this case of £600 would be deemed to be the net pay. The Cashflow Excel template assumes that the net pay is paid in the month of entry, whereas the payroll tax deduction, in this case 40% or £400, is paid based upon your settings that you've set the payroll tax to be paid. If I just jump across to the Info tab, and on here at the moment we've got this set up to be paid in 30 days. You have the option to set it to cash, i.e. immediately in the same month of entry, 30 days which we've got it set to, 60 days, 90 days or 120 days. You do also have the option to use an override, and I'll go into more detail on that on the PAYE or Payroll Taxes function within the Cashflow Excel template. But essentially what you can do, you can override this by putting your own payments when and how these occur. The next column relates to terms. The first line, which is our contractors, has a 1 selected. And what that means is the Cashflow Excel template assumes that the contractors in this case are paid in 1 month time. If you click on the drop down, you can change that from anything from the 1 month currently set all the way through to 12 months. So if we selected 12 months, that would mean that the entry in January wouldn't appear on the cash flow forecast until 12 months time. If we change that to 2 months, it would mean that the entry in January would be paid in March, i.e. 2 months time, and so on. The other selection option within the terms is Payroll Split. The Payroll Split selection is used where in the previous column where we've set a payroll tax rate, as these two columns work hand in hand. So if you want the 40% in the previous column to actually affect the amounts you put in the January onwards columns in this particular example, you need to select the Payroll Split. Finally, we have the forecast period and the months where we enter the amounts we expect to be incurred over the cash flow forecast period. So in January 2018, on the contractors line, we have £5,995. And in February, 6,250, March, 6,505, and so on. The Cashflow Excel template will pull these figures through to the correct places on all the different reports, taking into account the VAT, the payroll tax rate, the terms, and so on and so forth. The first report I'm going to have a look at is the trading report. Down the left-hand side, you'll see the names that have been pulled through directly from the Data Entry tab. So the first line is contractors, and you'll also see that in January 18 it's pulled through the £5,995, and then in February the 6,250, and so on. The second column is to show the VAT or the PAYE or payroll tax rate. The first one has a V-10%, the 10% being the new rate that we'd entered. And that implies that there's VAT of 10% applied to all the amounts in that row. The following one has a P followed by 40%. That row has payroll taxes applied to it, and we put in the new 40%. We know that each of those numbers has payroll tax applied to them. The net total of your cost of sales is pulled through onto your profit and loss account under the heading Cost of Sales. So each of the months going across, you'll see the net figure as a total on each of the months. So in January 18, you have the figure of 20,583 and so on. Also, the amounts are pulled through onto the cash flow forecast. So in this case, you have payments and you've got the trade creditors, which relates to cost of sales. The amounts included on the cash flow forecast report would be inclusive of VAT, as opposed to the amounts included on the profit and loss forecast, which would be net of VAT or sales tax. Also, the amounts included in the cash flow forecast will be affected by the terms that you'd set. So if, for example, your suppliers are paid in 2 months' time, they don't appear on the cash flow forecast until 2 months after the month of entry. So the Cashflow Excel template makes your entries very easy to do, because all you need to do is enter them in the correct months, and then the Cashflow Excel template does the rest for you. Finally, included on the balance sheet is your trade creditors, or what's outstanding at the end of each month, or in this case at the end of each year, because this is a summary balance sheet. This figure takes account of all those trade creditors or suppliers that you are taking time to pay, and this reflects anything outstanding at the month end, or in this case at each of the year ends of the cash flow forecast period.